Hello, beautiful people, and welcome back to Boni's Life, your weekly dose of crypto clarity in a world of digital chaos. I'm your host, Boni, and if you've been watching the crypto markets this past week, you've probably experienced more ups and downs than a kangaroo on a pogo stick. We saw Bitcoin flirt with a new all-time high, only to get a little shy and retreat back to levels that have the bears sharpening their claws. But fear not, my friends, because in the midst of volatility lies opportunity. And today, we're going to dissect the market, peek into the minds of the whales, and arm you with the knowledge you need to navigate the exciting week ahead. So, grab your coffee, silence your notifications, and let's get into it. We've got a packed show for you today. We'll start with a deep dive into the technicals of the past week's market performance. Then we'll hear what the big guns, the institutions, the regulators, and the seasoned traders are saying. After that, we'll unveil our calendar of market-moving events for the coming week. And finally, the moment you've all been waiting for. I'll share some of my personal strategies for trading this market. Ready? Let's roll. All right, let's get technical. The past 7 days in the crypto market have been a masterclass in volatility. We saw Bitcoin, our beloved digital gold, surge to a new all-time high of over $123,000. The champagne was on ice, the moon memes were flying. And then reality, as it often does, came knocking. The price pulled back, and we lost the crucial $100,000 psychological support level, sending us down to the $94,000 to $96,000 range. That's a roughly 22% correction from the peak. A move that certainly shook out some of the weaker hands. So, what are the charts telling us? Let's look at some key indicators. The Relative Strength Index, or RSI, is currently sitting at around 37. For those of you new to the game, anything below 30 is considered oversold and anything above 70 is overbought. So, at 37, we're in bearish territory, but we're also getting close to a point where a bounce could be on the cards. The MACD, another popular momentum indicator, is also flashing a sell signal telling us that the bears are currently in control. However, the stochastic indicator is screaming overbought, which adds a layer of complexity to the picture. It's like the market is having an argument with itself. Now let's talk about support and resistance. The big one to watch is the 94,000 to 95,000 level. This is a critical support zone, and it's not just a line on a chart. The financial giant JP Morgan has come out and said that they see Bitcoin's production cost at around $94,000, which they consider a price floor. So, we have a fundamental reason to believe this level will hold. If it doesn't, we could see a further drop to the $88,000 to $90,000 range. On the upside, our first major hurdle is to reclaim that $100,000 level. If we can do that with some conviction, the next targets are $104,000 and then the Fibonacci resistance at $109,400. So, what are the big players, the so-called whales of the crypto world, doing in this volatile market? Well, it's a mixed bag, but there are some fascinating insights. As I mentioned, JP Morgan is calling the current levels a bottom, with a price target of a whopping $170,000 within the next 6 to 12 months. They're looking at the Bitcoin to gold volatility ratio and seeing a massive opportunity for Bitcoin to challenge gold's dominance. And then we have the ultimate Bitcoin bull, Michael Saylor of MicroStrategy. He's not just talking the talk, he's walking the walk. He recently announced that his company is buying quite a lot of Bitcoin during this dip. This is a powerful signal of institutional conviction in Bitcoin's long-term value. When the big boys are buying, it's usually a good idea to pay attention. But not everyone is so bullish in the short term. Market expert Timothy Peterson is calling for a December bottom, pointing to the Fear and Greed Index, which has plummeted to a score of 9, indicating extreme fear. And some technical analysts are warning of a further breakdown if we lose that critical $94,000 support. And of course, we have the perennial Bitcoin bear, economist Peter Schiff, who is, as always, predicting a crash to zero. But let's be honest, Peter has been wrong so many times. He's almost become a contrarian indicator. If Peter says sell, maybe it's time to buy. Now, let's shift our focus to the fundamental side of things. The crypto market doesn't exist in a vacuum. It's heavily influenced by what's happening in the broader financial world. And the coming week is packed with events that could send shockwaves through the markets. All eyes will be on the Federal Reserve this week. We have a whole parade of Fed speakers, including the big man himself, Jerome Powell. On Monday, their comments on inflation and future interest rate policy will be scrutinized by every trader on the planet. If they signal that rate cuts are on the horizon, that could be rocket fuel for risk assets like crypto. But if they maintain a hawkish tone, we could see more downward pressure. We also have key inflation data coming out of Canada on Monday, which will be a big deal for the Bank of Canada's policy decisions. And on Tuesday, we'll get a read on the US housing market with the NAHB Housing Market Index. We'll also be keeping a close eye on trade data from Japan and industrial production numbers from the US. All of these data points will paint a picture of the health of the global economy, which will in turn influence risk appetite in the crypto markets. And let's not forget the regulatory front. We've seen some positive developments recently, with the new SEC chair, Paul Atkins, unveiling a plan for a token taxonomy to bring more clarity to crypto regulation. The Genius Act, the first comprehensive stablecoin legislation in the US, was also passed earlier this year. This increasing regulatory clarity is a long-term bullish catalyst for the crypto market, as it paves the way for greater institutional adoption. All right, this is the part of the show where we get down to business. How do we trade this market? Here are a few strategies I'm considering for the week ahead, tailored to different risk appetites. First, for the more conservative traders, a range trading strategy could be a good option. I'm looking to buy in the 94,000 to 95,500 zone, with a stop loss just below 93,000. My take profit targets would be around the $99,000 to $100,000 mark. This is a classic buy low, sell high strategy within a defined range. For the more aggressive traders, a breakout strategy could be in play. I'm waiting for a decisive break above the $100,000 level with strong volume. If we get that, I'll be looking to enter a long position with a target of $104,000 and then $109,000. My stop loss would be just below the breakout level at around $98,500. Now, for the bears in the audience, there's also a breakdown strategy. If we see a convincing break below the $93,500 support level, a short position could be profitable, with a target in the $88,000 to $90,000 range. But be warned, shorting in a bull market is a risky game. So this is only for experienced traders. And finally, for the long-term believers, the dollar cost averaging or DCA strategy is always a solid choice. Accumulating Bitcoin in the current price range with a long-term view of JP Morgan's $170,000 target could be a very profitable move. This is a great way to build a position without trying to time the market perfectly. And let's not forget about altcoins. I'm keeping a close eye on the strong performers like Ethereum, Solana, and Cardano. The privacy coin sector is also showing a lot of momentum. But remember, altcoins are generally more volatile than Bitcoin, so it's wise to wait for Bitcoin to stabilize before making any aggressive moves in the altcoin market. So there you have it, folks. A whirlwind tour of the crypto market. The key takeaway for the week ahead is this: we're at a critical juncture. The market is holding its breath, waiting for a catalyst. Will it be a dovish Fed, a surge in ETF inflows, or something completely unexpected? Only time will tell. But one thing is for sure, it's going to be an exciting week. Remember, this is not financial advice. Always do your own research and trade responsibly. The crypto market is a wild and wonderful place, but it's also a place where you can lose your shirt if you're not careful. So stay informed, stay disciplined, and most importantly, stay curious. That's all the time we have for today. Thank you for joining me on Boni's Life. If you found this video helpful, do me a favor and smash that like button, subscribe to the channel, and hit that notification bell so you never miss an episode, and I want to hear from you. What are your thoughts on the market? What are you trading this week? Let me know in the comments below. Until next time, trade smart and live well.